Hi there. In this video, I want to compare two very common renovation mortgage programs, the VA renovation program and the 203K renovation program. I've been doing a lot of VA renos lately, getting a lot of questions, a lot of good questions. There's a lot of misnomers about this product and people just don't understand it. So I'm going to go deeper into the VA reno program and then show you the differences between this and 203K. So let's get started. So what is a renovation mortgage? A renovation mortgage is a mortgage program where you can combine renovation costs and purchase costs into one loan. So it's great if you're buying a house that maybe has a lot of imperfections in it, or maybe it needs a lot of repairs, and there's all kind of different issues that go on in houses nowadays that can affect your need for a renovation loan. Right now that the inventory is so tight that people can't find the house they want, renovation loans will open up your inventory because now you can find houses that maybe are a little less than perfect. So let's talk first about VA renovation loans. First rule is obviously you need to be a veteran and be a VA eligible borrower to take a VA renovation loan. How about that? And so all VA rules would apply. So for example, it is a zero down loan, and it also has lower rates than conventional or FHA loans. There are some limitations that you need to know when doing a VA renovation loan. First thing to know is it can be much harder to find lenders that offer it. I'm a full service mortgage broker, and out of the 150 lenders or so that I have, only 4 even offer this program. And you'll find that very, very few loan officers even know how to do them. Even in the VA space, I've talked to my VA friends who do a lot of VA loans, and a lot of them, if they've done any, have maybe done 1 or 2. So it's a very, very niche program, and you got to really talk to somebody that understands this program. That way don't end up getting screwed up. If you go down to a local bank, you're not going to find anybody that knows how to do them. Your big online lenders, Veterans United, USA, those places don't offer. Really, mortgage broker is really the best place to find someone. And I do have this program, and I do specialize in it. One of many things I do. So I can certainly help you out if you want to talk to me about it. The other thing to know is that most lenders are going to cap your repair costs on VA Reno, and most will also limit what you can actually get done on VA Reno. So a lot of them will say you can't do structural repairs and that type of thing. And as far as the caps, most will cap between 50 and 100,000. There's all kinds of different things online. Unfortunately, a lot of these bloggers will claim that it's 35. Some will say 50. Some will say 100. In actuality, the VA has no actual guidelines on repair caps. In fact, I know of a lender right now that actually go over 100. A lot of people don't know about this company, but it is actually true. You can go over the 100. So if you've seen things online that say there's a repair cap, that's actually not true. It is a lender-specific guideline. But your choices get a lot slimmer the higher you go on your repairs. Other big thing to know is occupancy rules still apply if you're doing VA renovation. Just a quick reminder, on VA, you need to occupy the property within 60 days, which can be extended up to a year and with extenuating circumstances. Although really in practice, the only extenuating circumstance I've seen approved is a PCS situation. So don't think that you can get approved to extend occupancy just because there's a renovation going on. That just simply does not happen. Some lenders will require the property to be inhabitable or safe to live in at closing. Now, this doesn't mean that it meets all VA standards. It just means it's inhabitable, that you could move into it after closing. Some will say it has to be inhabitable within 60 days of closing, which is that occupancy requirement. But you have to keep that in mind. So if you got something that's going to take 6 months to fix up to be able to at least live in it, that's not going to work. Other thing to know in VA is that even though the VA doesn't really address mixed use, which is a property that has a residential and commercial space on the same property, I don't know of any VA lenders that will allow mixed use on a VA reno program. There might be some out there, maybe I'm not approved with, but I just don't know of any. So that's going to be very, very hard to find. Mixed use is kind of tricky anyway. Now let's talk about the 203K. The 203K is a FHA program, so it goes on. How about that? FHA guidelines. What a crazy idea that an FHA program would go based on the FHA guidelines. And anyone can use it. So there's no real limits like there's on VA, which is good. However, it is at a higher cost. You've got your upfront mortgage insurance and you've got some back-end mortgage insurance, and the rates are higher. So keep that in mind. If we can go VA, if you're VA eligible, that is definitely the recommended route to take. As with all FHA loans, you're looking at 3.5% down to a 580 score, or 10% if you can find someone that'll do it, down to a 500 score. It can get really rare if you're doing Reno. It is a much more common program, a lot more lenders that offer it. The other thing to know is you have a 6-month time frame to complete repairs per FHA guidelines. Some lenders will make that shorter, but 6 months is the FHA rule on that. It's also a lot more flexible in repairs. A lot of lenders won't let you do structural repairs, for example, on VA Reno, but they will on FHA, for example. So if you got something that means major rehab, the 203K is going to be a lot more flexible. The other thing is they will let you postpone occupancy on FHA 203K. So if you got something that's completely trashed and you're not going to be moved in at closing, that's definitely could be something to consider. You can also postpone payments during the rehab period. There's a way to actually roll a few months of payments into that rehab budget. And so it's a really messed up house that you need a lot of repairs on. That's something to consider. And you can actually do mixed use on 203K. I actually know some lenders, I'm approved with a few lenders that can actually do a mixed use property on a FHA 203K. It has to be primarily residential. In other words, 49% or less is the commercial side, but you can actually do that. The other thing to consider if you're doing mixed use Reno 203K is that the commercial side you cannot use renovation funds on the commercial unit. And that can get tricky because I had somebody that's trying to buy like a 3-plex in Clinton County with 2 apartments and a commercial space and all this stuff. And no, you can't do that on 203K. You can only renovate the residential side. So the commercial space has to be move-in ready and meet FHA guidelines. And so that can be really tricky. So it's available, but it's tricky. So there you go. So that is a quick 7-minute comparison between the FHA 203K program and the VA renovation program. If you have any questions about mortgages or renovations or really anything, give me a call. My number is 937-572-3713. I can also be reached at Scarpero.com. Talk to you soon. Bye.